Is this the outcome that you had hoped for, or is it still too temporary to really buy into?
Yeah, good morning, Brian. I think this is probably the best we could have expected. I think from business's point of view, we wanted to see both sides step back from the brink and get into some kind of a real negotiation with each other. You know, to a large extent, as people are saying, they've kicked the can down the road, but that's probably a good thing because now they've got some time to both, assess what their strengths and weaknesses are in negotiating with each other. We think it's a good sign that China appears willing to talk about some of the fundamental issues. But by the same token, I don't think it's going to be that easy to get agreement on a lot of these things. And there are downside risks for both sides. I think the reason they stepped back from the brink is they started realizing that this trade war was becoming costly for both of them. We still urge the administration, you got a lot of work to do here to get the rest of the world on your side, put real pressure on China, and also avoid doing counterproductive things to the U.S. economy over the next 90 days.
Do you think the stock market is overreacting to the headlines, Rufus?
I'm not surprised that we're seeing a sudden bump. You know, the impact of these tariffs domestically on the U.S. economy were becoming a real problem, and that's going to be a constraint on the Trump administration going forward. I mean, yes, the market's going way up today, and the administration is talking about if we don't get a deal in 90 days, we'll go back and put those on. But what happens to the market 90 days from now if we return to a trade war scenario?
Well, that is the question. I mean, and we're going to be asking it all day here on CNBC, Rufus, and that's the concern. We have a 90-day pause. It's a nice headline going into the new year. As you noted, it's a better headline than possibly other options.
Yeah.
But what's the next step here? As you heard Eunice Yoon say, China is downplaying this.
Yeah, I mean, I'm not surprised at that. They're emphasizing the things that they believe were good points for them in the accord that was struck. They're looking at the fact that the U.S. agreed to work towards the removal of all barriers if we can get a decent deal. That shouldn't surprise anyone, but the Chinese are emphasizing that rather than, some of the things they appeared willing to put on the table. Look, both sides do that in a negotiation of this type. Eventually, a fuller picture will become clear, and we'll know, what kind of path lies ahead. It's going to be a real difficult, tortuous negotiation. And, in a fundamental way, the U.S.-China relationship has changed now because both sides probably have a lot more mistrust of each other. They'll have to rebuild that. But, also from a business point of view, business is going to be hedging its bets about the U.S.-China relationship going forward. That might mean more supply chains leaving China, but it also means for U.S. farmers, for example, are they really going to get back the Chinese market the way they had it before all this started?